Hello and welcome. I'm Suyash Maheshwari and you are watching Last Tick here on News 9, where we break down the day's action on the D Street. Now, a new day and a new record high for the market, and that has been the story pretty much for the markets lately. You know, Nifty has hit a record high for the fourth straight session in a row. And if you look at the price action this week, the pace of rally overall is slowing. But before we get to that, let's look at how the markets fared in today's trade. Now, Nifty, as you can see on your screen, was up 0.4% at about 20,937 mark. We just ended about 20 points shy of the all-time high, which sits at about 20,958 mark. Sensex is also slowly and steadily inching towards that 70,000 mark, just about 350 points shy of it. The index, the 30-share index, rallied by about 0.52% in today's trade. And if you look at the mid-cap and the small-cap space, they have been on a 22-day winning run now. The Nifty mid-cap index scaled a new record high as well. The index ended about 0.25% higher, comfortably above the 44,200 mark. Now, the small-cap index, which was under some bit of a pressure, selling pressure in the morning trade, managed to pull back and clawed back all those early morning losses, has ended as one of the top gainers among sectoral indices. The small cap index on the whole was up 0.38% for the session and ended above the 14,500 mark. Now, for the bulls, a problem will be India VIX, which has spiked up by about 2% and is close to that 14 levels, and we have not seen these kind of levels since May of this year. And meanwhile, while Nifty has hit a record high for the fourth straight session in a row, if you look at the price action overall, the pace of this rally seems to be slowing down. On Monday, Nifty was up somewhere around 2%. Tuesday, it rallied by about 0.8%. Today, we are up by about 0.4% or so. And even if you look at the broader markets, although they are rallying and the exuberance is still there, there are some signs of exhaustion at higher levels. We are seeing big intraday dips in the last two sessions. And overall, the index, both the indices are able to claw back all those losses. But yeah, the intraday trades are still there and something that market participants perhaps need to be wary about. And talking about, the exhaustion, the signs of exhaustions, even if you look at the advanced decline ratio, on Monday, it was somewhere around 2 to 1. That means about 2 shares rose for every one that fell. Today, we are pretty much at 1 to 1, although with a slight bias towards the bullish side. That overall makes you wonder, if a turnaround is perhaps or a pullback is imminent from these levels. But to discuss this and more, let's bring on board Mr. Avinash Gorakshakar, Director of Research at Profit Mart Securities. Hello, welcome to the show, sir. Thank you for joining us here on Last Tick. We have pretty much scaled new lifetime highs for the last 4 days on Nifty. But as I was talking about earlier, there are signs of exhaustion at higher levels. Even in the mid-cap and the small-cap space, we are seeing big intraday dips. Are you cautious at this point in time?
Yeah, I think, Suyash, clearly, the kind of rally we are seeing in the markets, possibly, we could see some profit booking tomorrow. And I think it is quite logical because ever since, the state election results were declared on Sunday, I think the markets have taken off on one side. And I think this has been supported by a lot of good FII buying. It has also been supported by, lower bond yields and most importantly, lower crude prices. So I think macros continue to be quite strong. But I think the pace at which stock prices have actually galloped, I think some meaningful profit booking could come in. I think to add to this, the Adani stocks in the last 2 days have done remarkably well. I think considering that, the Bloomberg notification came in that the US government has got nothing negative on the group. So I think all these factors apart, I think now the markets would obviously take a small breather. And I think it's a good sign for the market because that would consolidate the market, for its next re-rating kind of, move. So I think all in all, I think the broader market still continues to remain attractive. As you rightly said, there are many stocks where the growth numbers and the earnings numbers look pretty attractive. But I think if at all there is a meaningful correction in the next few days or in the coming week, that would give an opportunity to investors to, accumulate good quality stocks at lower levels.
So, sir, what should be the strategy going forward? Is it now a sell on rise sort of a market or a buy on dips sort of a market?
No, definitely it's a buy on dip market, Suyash, because I think, clearly the political risk now is out of the system. the markets are happy that this kind of mandate in the state election clearly makes the general election more convincingly for the governing party as of now. And most importantly, macros have now started getting more and more favorable.
Hmm.
Oil marketing companies, as you rightly mentioned, have moved up largely because crude prices have remained soft for a very long time.
Right.
Inflation numbers are also going to be quite softer. In fact, the 13th Fed meeting is going to be very important for the markets.
Hmm.
Any positive commentary from Mr. Powell would obviously mean that the Friday policy here would also take a note of that. Our expectation is that we could have a status quo now, and the commentary from the governor could be quite positive. So I think it's going to be a buy on dip market. Corrections will happen. Prices have gone up very sharply in a very short period of time. So
Hmm.
definitely, I think meaningful correction is also good, and I think these kind of corrections will make the market more stronger going forward.
Now, so as you rightly pointed out, we have RBI's monetary policy decision that comes out later this week on December 8, and Fed's policy decision will also come out, next week. You said that you don't expect any shift in stance. So when can we expect, that rate cut cycle to start? Early next year or sometime, in the middle of the year?
No, I think my guess is, Suresh, you'll have to wait till March because that would be a right time where you could possibly see the correct assessment of inflation, the progress of the monsoon. And obviously, at that point of time, sometime in March, April, I think we could be looking forward for a rate cut. And I
Hmm.
think that is what the markets are factoring in because even if the market gets a hint that this is going to happen, that is more than enough for the markets to rejoice.
Hmm.
The actual decision could come in sometime in March or April, but I think the narrative could possibly come in much earlier from the commentary of the governor. So I think we'll have to wait and watch till at least the Jan to March quarter when rate cuts actually take place, which I think is very much possible.
All right, let's also look at some of the sectors that were in focus today. Now, Nifty Bank fell in today's trade. Now, in the previous two sessions, it added about somewhere close to 2100 points. But today, as we know, was a weekly expiry for the futures and options contract. And as a result, we saw some profit taking take place, especially in the private banking sector. As you can also see, the Nifty private banking pack on the whole fell by about 0.33%, whereas the PSU bank continued to rally and the index overall has gained over 0.6% in today's trade. Coming back to the Nifty banking pack, we ended about 50-60 points off the day's low, but we still made an all-time high above the 47,250 mark. So, a big dip over there, but not a meaningful dip that the market was expecting given the kind of rally we have seen take place in the last few sessions. The IT pack took over the today's trade. It was the biggest winner. In fact, the stock, the entire index was up about 1.67%, and it's just about 400-500 points shy of its record high levels. Auto stocks saw some correction. By the way, it was another index that has scaled up all-time high level in today's trade, but we saw some bit of a weakness set in for two-wheeler stocks on the back of a CLSA report, which has downgraded some of these two-wheeler names like your TVS Motors, Hero MotoCorp, Eicher Motors, and Bajaj Auto. The FMCG pack was another major gainer that rallied by about 1% or so, and the Realty pack, which is on at a multi-decade high, saw some bit of a profit booking take place in today's session, and the index corrected by about 0.3% or so. Now, Avinash, coming back to you, the real estate sector is the one I want to talk to you about. It's booming in 2023. The index on the whole is up somewhere about 70% or so year to date. And some of these stocks have turned multi-baggers this year, but there are also concerns that the black money component in the real estate is getting higher and that people might be using the sector to utilize that cash pile. Is this something that investors should be concerned about?
See, I think my guess is, Suresh, on the ground, our report suggests that inventories are moving very fast, and in fact, the second half of this financial year, typically the festive season sees a lot of volume pickup, in the real estate sector. Now, this report about black money getting into the system is, frankly, we don't know how big or large it is. But definitely, I think if it is happening, then it is definitely not a good sign. The government may put some restrictions on these kind of transactions. But overall, the health of the real estate sector, Suresh, is extremely solid. In fact, in pockets like Bombay, in pockets like Pune, or for that reason in Gurgaon, that is North India, we've been seeing prices, moving up by almost 30-40%. So I think, the kind of inventory and the kind of new projects which have been announced by the real estate players actually makes us pretty confident that this rally will continue. In fact, in the last 10 years, this sector did not, move and do anything. Now the sector has come out of a lot of problems, a lot of challenges earlier. So I think it's going to be a pick and choose market. So, broadly the market will do well, but yes, clearly I think you got to be very selective in this space. Maybe not all companies in this space may outperform, but I think, as I said, Bombay, Delhi, and all the tier 1, tier 2 markets are places where growth opportunities would continue to come in because corporate capex is growing very significantly, and that is obviously going to result in a lot of real estate activity.
All right. So another sector I wanted to pick your brains on is the auto pack. Now, there was a report from CLSA today, and it has in fact downgraded some of these two-wheeler stocks on concerns about valuations. But on the flip side, interestingly, JP Morgan had shared a bullish report on these stocks, and just a few days back before the November sales figures came out. So, in your opinion, which global brokerage's assessment are you more convinced with?
No, I think it's would be unfair for me to comment on any brokerage, but my sense is that two-wheeler stocks in the near term, Suresh, could see some profit booking because these stocks had gone up significantly in the last 2 to 3 months. So some amount of profit booking and consolidation could definitely come in, and that is exactly what we saw in the markets today. My sense is that whatever ground reports we have been getting is that the rural markets are now picking up. See, rural market is a very big demand driver for two-wheelers, especially for companies like Hero Motors, typically, for companies like Bajaj, TVS. So I think in this current year, if the rural market demand picks up, then I think you're going to see a very strong demand push coming in the second half of this financial year as well as for FY25. So I think maybe at lower levels, stocks like Hero Motor, typically, maybe a Bajaj Auto could definitely be worth considering accumulating. But at these levels, at least for the near term, the market seems to have discounted FY24 numbers fully. FY25 is partly discounted. So I would wait for a meaningful correction to buy into these stocks. But yes, some amount of froth in the system would obviously get liquidated by some sort of selling in the sector. But long-term prospects continue to be quite positive.
Now, sir, one of the better performing sectors, in fact, one of the best performing sectors in today's session was the IT pack. And I am just looking at all the constituent stocks of Nifty IT, all but Persistent ended today's trade in the green. And today's rally was led by the big large cap names such as your Wipro, which rallied by about 4%, LTIMindtree, which was up almost 3%, TCS, which added about 2%. What's leading to the rally in IT stocks?
Well, I think some sort of contra buying and value buying seems to have emerged because, if you see the overall market, Suresh, ever since the election result came on Sunday, I think apart from IT, most of the other sectors performed significantly, whether it was autos, auto components, capital goods, cement, for that reason, building products. Typically, IT was ignored. And now when the markets have actually taken off in a big way, these companies obviously, look to be pretty, attractive in terms of their valuations. But yes, growth is definitely questionable. So I think probably, large cap names, some mid cap names like KPIT, Persistent, some large cap names like TCS do look attractive. But I think here investors who are taking a call here are clearly looking at the valuation, as an attractive, standpoint. Maybe over the next, say, 12 to 15 months, the IT sector could definitely come back into growth gear again. But till that time, I would believe it's going to be a market performer. So I think today's buying is just about some value buying which has happened. I don't think that this is going to be sustained over a longer period. And more importantly, only longer term investors can make money if they want to invest at current levels. Maybe in the near term, the momentum would continue to be little erratic.
All right. Now, sir, one of the things that we noted was that, Rupee has in fact slipped to a record low, and typically a depreciating Rupee bodes well for export-oriented sectors such as your pharma and IT, which has substantial exposure to US and European markets. Can we expect a further rally on the back of this?
I think, see, in the short term, this is definitely an attractive part because a weaker rupee is definitely good for IT companies. But you must also realize that, pricing for IT companies is extremely competitive. So, any kind of benefit in the currency obviously has to be passed on to the company, has to be passed on to the customer. So, typically, maybe a short term bounce may be possible, but over a longer period of time, currency benefits are obviously not entirely taken up by, IT companies. They have to obviously share some of the gains. So typically, this could be a short-term bounce, Suresh. I don't think this is going to be a key major kind of driver. In fact, a weaker rupee for a longer period of time is not a good sign. And I
Hmm.
think we need to have a stable rupee if you have to have a proper healthy trade deficit going forward.
Now, sir, coming back to rupee, why is it at record low? Because the macro data is supportive of the economy. GDP is growing at a GDP growth is strong. The markets are in uncharted territory. But why is rupee at a record low?
Yeah, I think Suresh, you must realize one thing, that FI inflows have started only in the last 8 to 10 days. Till that
Right.
time, the rupee was facing significant pressure because of outflows of dollars outside the market. So I
Hmm.
think, it will take a little bit of time before the rupee stabilizes. But my guess is that once dollar inflows start coming back in India and FI start buying aggressively, at that time possibly you could see the rupee, getting stable, a little bit stronger. Till that time, I think we'll have to wait and watch. But I think clearly looking at the inflows in the last 8 to 10 days,
Hmm.
from the FIs, I would not be surprised that by end of this month, we could possibly see a more stable and a stronger kind of trend in the rupee. But yes, I think you're right in saying a weaker rupee is definitely surprising, considering that the last 10 days, inflows have significantly jumped. So we'll
Hmm.
have to wait and watch how the trend moves in.
And sir, do you expect this buying momentum, the strong buying momentum that we are seeing from FIIs, come back and continue over the next 2-3 months? Because I mean, if you look at the 10-year bond yields in the US, they have fallen by about 80-85 basis points, but they are still relatively high.
Yeah, I think Suresh, they are relatively high, but I think from the peak levels, the best part is the way it is the way how you look at it. They've come down to 4.2%, and definitely there has been a significant improvement from the earlier months. Most importantly, I think India is one of those markets now. Most of the FIs are viewing very positively, considering the kind of strong earnings growth, strong political stability which is here, and I think a lot of money is being shifted from China to India. So I think
Hmm.
you're going to see a lot of money shifting from China to India, and I think this momentum would obviously get further kind of an aggressive push post the general election sometime after May June next year,
Hmm.
because after that time we could possibly see a clear direction happening on the political side, on the policy side from the new government. So I think
Hmm.
you'll have to wait and watch for a few months, but the best part is that FIs have started coming back, and I
Right.
think India now continues to be a hot market across the globe.
All right, India continues to be a hot market across the globe. Now, so before we let you go, we have a lot of binary events over the next 5-6 months. The biggest, of course, being the 2024 general elections in April and May of this year. So, what should be the strategy for retail investors, over the next 5 to 6 months?
Yeah, I think my guess is that whenever investors make a lot of money on any company listing, specifically IPO listings, or typically if even in the frontline secondary market they make a decent amount of money, then I think you need to book out your profits, because see, paper
Hmm.
profits are not important in the market. You need to convert them into cash flow. So I think do regular profit booking
Hmm.
and continuously focus on quality stocks. I would believe that there's a good opportunity in the large cap space, because these have hardly performed in the last few months, and the broader market also would be good, provided the investment call is for the next, say, 12 to 18 months. So
Hmm.
you've got to have a pick and choose strategy, and I think look at it from a purely investment point of view. A
Hmm.
trading mentality would not be viable, because the market would now become very volatile from January onwards.
All right, that's the view from Mr. Vinash Gorakshankar. Perhaps don't be scared of booking profits. Trading mentality is not likely to get you much returns in this sort of a choppy market. But thank you for joining us here on Last Ticks. Appreciate your thoughts. But with that, we have completely run out of time on this edition of Last Tick. But do stay with us, as we'll be back with Business Plus after a short break.